Hi and welcome back to Credit Conversations. So I'm joined once again by Craig Lupton, our Head of Consumer Insight, and I'm thrilled to also welcome Colette Land, our Head of Consulting, who spends a lot of time working with telcos and utilities providers. So we're going to be focusing on that topic today. Before we go into that, let's firstly start, Craig, with how are the credit trends looking at the moment? We obviously have had a variable year with some interest rate rises. How's that playing out into consumer demand and risk?
Well, I think to begin with, I think the consumer base in the UK is still remaining very hungry for credit, if you like. Appetite is there from demand side, particularly in the unsecured markets. We're seeing cards and loans, year-on-year growth once more coming through. That's translating into supply side being met by lenders. We've got lots of products out there right across the risk spectrum and affluence base in there. We've got long balance transfer rates, we've got competitive loans market on there. And what that is resulting in is a growth in terms of the levels of borrowing we're seeing, both in terms of volume but also value as well. And that's moving from cards and loans also into the automotive space. We've seen some positive numbers there. And also retail finance and buy now, pay later, proving to be constant means of transacting for consumers, particularly in their digital wallets as they go out and continue their purchasing. The macro trends, the geopolitical things that we're seeing in terms of the economy, not really having an effect in terms of slowing down that consumer demand as of yet. There are still headwinds, and I think some pockets of consumers may see some problems in terms of their payments going forward, but for right now we're seeing, like I say, sustained demand from consumers and lenders alike.
Okay, great. You previously mentioned about year-on-year growth, specifically in the unsecured sector. How is that looking now? Is that still the case?
Yeah, it's still broad, it's still coming through. We've seen, like I say, broad through the risk spectrum on there. We're seeing consumers growing their card wallets, so more and more consumers have got credit cards. More and more consumers are growing their numbers of cards they have in their wallets or their digital wallets on there. We are seeing nearly 2 million customers now have got 5 or more credit cards on there, and more consumers are using all of those cards or more of those cards in their wallets. So spend is going up as well. That is leading to some growth in terms of consumer indebtedness that we're seeing through the population currently as well.
So people are starting to change their behaviours around credit cards?
Yeah, absolutely. I think it's more broadly, people are changing their behaviours around credit in general. We're seeing certainly more engagement in terms of unsecured credit. We're seeing a change in behaviours across the age demographic spectrum as well, in terms of how people are interacting, how people are using credit, how people are managing their credit products as well. Also, we've got a competitive market with lots of different features and innovative products out there that are blending the lines between those traditional vertical markets as well.
So speaking of those traditional vertical markets and potentially something a little bit non-traditional, Colette, you're here to talk to us about what's happening in telcos at the moment. So why do lenders need to start keeping an eye on what's going on in the telecommunications sector?
Yeah, well, more people have mobile phones, more people are using them, so subscriptions are up. According to the latest Ofcom data, 91 million subscribers of mobile services, up by 1 million over the last year. But it's more about how people are using their phones, so they're actually using them as an integral part of payments. UK finance data shows us that one of the biggest increases and changes in behaviour is consumers using mobile contactless payment services, where it was around a third of adults, and then over the last year's period it was up to a half of adults are using mobile, so your Apple Pay, Google Pay, etc., to pay for things. But something that a lot of people don't realise about products on our bureau is that it's actually the biggest area of product openings is for telcos products. 14 million communications products opened on our bureau over the last year, which is the biggest vertical for product openings.
So Craig, what are you seeing in terms of that?
Yeah, like I say, 14 million, there's only credit cards is 10 million a year, so it's significantly more in terms of what we see coming through in terms, and that's a mixture of contract and handset finance that's coming through on there. And again, it is the biggest number that grows on there, and I think we saw significant growth in 2025 as well, as more and more people took out handset finance or took out new contracts on there and sort of fueled that growth, if you like, in terms of telecommunications.
I'd love to come back on another point around why it's important for people outside of telcos to understand the telco trends, which is that obviously, whether you're working in utilities or whether you're working in a bank or credit card company, often one of your main routes to talk to a customer is through their mobile phone, be it messaging or be it calls, whether it's to collect because you're in arrears, whether it's to support vulnerable customers. So actually, if your mobile phone services are terminated because you get into arrears, your ability to contact your customers disappears. So keeping an eye on the telco trends about what's happening with arrears and default rates is really important, because that's often one of the main routes for you to talk to your customers.
What are the other challenges that telcos are facing at the moment?
One of the key trends that's happening, particularly with mobile phones, is people are actually holding on to their phones for longer. Latest research suggests that consumers are expecting to hold on to their phones. There's an increase in the proportion of customers that are saying they're going to hold on to their phones for 3 to 4 years, and a decrease in those that are going to change them every 1 to 2 years. So sales is a massive pressure in the telco sector. There's a lot of fight around the margin to be able to get consumers to take your products, especially in the higher risk, younger age groups. So that's one area of challenge, is sales, especially given the fact that people are holding on to their phones for longer. The second area really is no intention to pay. Often a challenge for organisations that sell at point of sale. People take the product, make the payment at the time to get the product, but then any subsequent payments aren't made, so they never make any further payments. No intention to pay has been a massive challenge within the sector in particular. Saw hugely increasing rates throughout 2024. The rates have come down substantially over the last year or so, and actually there's been some really interesting technological developments within the sector to address it, which some providers have adopted, so behavioural biometrics, that kind of stuff, but some providers haven't, so they're being heavily punished with no intention to pay rates. So that's another challenge, within the telco sector.
Okay, so you touched on some interesting points there. Maybe let's bring Craig back in for a little bit additional insight. So we've talked about new account openings and the risk of no intent to pay. How are we looking in terms of collections? Yeah,
so within telcos, collections entry rates are actually increasing at the moment. One of the really interesting components within telcos is looking at default rates. When customers get into difficulty in telcos, how many are actually getting out of it, and are they flowing all the way through to default? Actually, those arrears rates are significantly deteriorating. About 65% of customers who get into difficulty in telcos over the next 12 months actually flow all the way through to default. They're all into a disconnection space, so when we talked about other providers or other suppliers being able to talk to customers using their mobile, those services are effectively being disconnected. So a hugely challenging area. How does that compare to the other sectors?
Yeah, and I think the telcos rate is one of the highest ones that we see in the market. So that 12-month default rate is increasing, and it is one of those highest rates on there. But I think that we've also seen a bit of a deterioration in terms of the UK consumer base itself. So we're increasing arrears rates are across the board. A lot of that is borne out by this rise in unsecured borrowing, particularly in the sort of higher risk end of the market, lower value end of that. That's flowing through. So lending in the last 2 years, driving a lot of the collections trends that we're seeing. We're seeing about 1 million accounts a month flow into collections for the first time, again, which is a significant number on there. So contact with those customers is key, which feeds back into your earlier point around the telecommunications and being able to get a hold of people using their mobile phones, for example, as well.
So some really interesting trends starting to occur in telcos. So that brings me on to what's next for the sector, Colette?
Yeah, I think there's some really interesting dynamics. So obviously I talked about the fact that it's challenging in terms of sales and getting products being, especially into higher risk, younger age customers. Looking at BNPL data for me is a big opportunity for telcos providers. So we've been looking at actually what's happening. In terms of telecommunication customers, typically about 16% of them are using BNPL as a payment mechanism. If you actually look generally at under 30-year-olds using BNPL, about 30% of those are only using BNPL. They aren't using credit cards or loans or anything else. So for me, is that an opportunity for telco providers to facilitate product sales in that sort of space? I think it's a real opportunity that we haven't seen before emerge, and is really interesting area.
Yeah, and I think BNPL usage, again, it's on the increase, right? It grew last year by something like 30%. It's grown again this year at 30%. We're seeing net sort of 200,000 new people using Buy Now Pay Later each month as well. So I think it's a fast growing sector, and how do you tap into that customer base? Because again, 98%, 99% of those BNPL transactions are repaid within the 3-month period as well. So again, it's wholly a good quality customer base as well.
And obviously BNPL comes into the regulatory landscape in July this year, so BNPL providers will now be required to meet the FCA regulatory requirements around creditworthiness and affordability assessments. So yeah, it hopefully increasing use of and visibility of that data to support providers to make decisions, potentially on those high-risk customers, higher-risk customers, younger age customers, where they are solely using BNPL as a mechanism of being able to afford things.
And I guess, as ever, with across telcos and utilities and the wider financial services, the key here really is good quality data and analytics to help understand, the level of risk, the right opportunities, the right levels of affordability.
Absolutely.
Okay,
Absolutely.
well, thank you both for your time today. It's been a really insightful discussion, and we'll see you again for the next episode of Credit Conversations.